Chanchal, I was waiting to talk to you because equities is what I know, and equities I can't resist talking about. Last 2.5 years, 3 years, a lot of IPOs came in, and we have a platform where we compare demat accounts, and we actually noticed that whenever there was an IPO coming, a lot of new demat accounts were opening, and LIC IPO, Paytm IPO, Zomato IPO, a lot of demat accounts were opening in that duration. Historically, is that the trend, or it's just that millennials have the FOMO factor much more ingrained in them, or that's always the case? Bull runs, more IPOs, more demat accounts, and once the market settles, they go away.
Sure. Hi. Thanks for the question. I think very interesting point you mentioned. What has happened in last 2.5 years, and when the market has been good, and a lot of people have entered the market, specifically from the millennial side. A lot of people I've seen who have never been invested have entered into the market. But if I were to take a step back, and Adil rightly pointed out, uh, in equity investing also it's about being aware of the risk. Where millennial probably uh, may get it wrong is that they are just investing by hearing the buzz in the market, and people like you, Pranjal, play a very important role where you teach them where to invest, how to invest, and what not to invest in. I think the most important thing, and the saying goes very much, is that equity investment is all about cash flow and cash flow and cash flow. And people who look at businesses from a longer term, and people who are able to identify the trend and catch them early, will be able to make a decent money. The good part of these IPOs are, many of these IPOs come at a point in time where the J curve is just starting. Let me take a step back and talk about few successful IPO. I remember Jubilant Foodwork, which is Domino's, which listed in India almost 10 years back, and the J curve in quick service restaurant was just starting. Someone who had invested in that would have made a humongous money, maybe 5-6x, if not more. Persistent Technology listed in India almost 12, 13 years back, and has gained tremendous tailwinds from the sector they were present in. So some IPO from the right sector, if you're able to catch up early, you'll make a reasonable money. But just investing
Any recent
blindfold in the IPO,
example? Any recent example,
yeah,
Chanchal?
sure.
Because 12 years ago, I was not even born.
So recent example would be, for example, if I were to catch a trend early, a campus footwear recently got listed. Zomato and Nykaa recently got listed. The reason I talk about these three companies are campus footwear is trying to catch up the trend of athleisure, and trying to catch up the trend of the informal footwear, which is a trend which I think will play out in next 5 to 10 years. Nykaa is catching a trend on personal care spend of the Indian millennial. Millennial today are online, and they're spending a lot on online. So that's where I was surprised yesterday. Nykaa reported the number. The BPC, the personal care, saw a huge amount of tailwind, and the AOV is 1,800 rupees close, and there is a huge amount of number of customers entering into that segment. The third company I talk about, Zomato. All five of us sitting here would probably use Zomato once a month, if not more. So all these three new companies which I spoke about, if you're able to catch up the trend early through IPO, also you'll be able to make humongous money. But you have to be aware that some IPOs are for the trend, some IPOs get listed. If the cash flow is not good, or if the cash flow of the company is not strong, we should be very careful to exit at the right time, or let professional investor like us invest for you.
Right. Essential interesting. You mentioned that most of us use Zomato once a month. As soon as you said that, I, for myself and for all the millennials on behalf of them, I was saying once a day at least. So that's how much, I see
Zomato,
people using. Yeah, sorry. Go
if
on.
Zomato team would hear that, they would be laughing at it, and the stock would be rocketing it. That's what they are trying to increase the frequency. The frequency of people using Zomato. If that improves, Zomato would be one of the most profitable company. That's what they're working upon.
Right, right. Right. And you mentioned about campus going into informal clothing, footwear, and I realized I really need to scale my startup to be able to afford shirts and blazers. I look really informal here right now, so I'll be scaling my startup much more seriously from now onwards. Coming to you, Harpreet, again, because we are talking about millennials, we have to go back to cryptocurrencies. And when we deal with assets like equities, there's always different ways to play that out. In a very aggressive manner, investing in small caps; in a very passive manner, investing through hybrid funds or large cap index funds. So you can adjust your exposure to equity through various options that's available. But when we talk about cryptos, we blanketly term it as really, really risky regardless of time frame. Whereas equity, we always talk about, if your time frame is good, it's less risky; if your time frame is less, it's more risky. So we don't talk about time frames while investing in cryptos. We say it's risky, and at times we paint all tokens, all coins with the same brush. So I think, at time, do you think we on the other side, who have seen the financial market much more than young investors entering the market, we also kind of paint an extreme picture of cryptos by saying no, they are extremely risky? Where do you stand on this?
I think I would stand on that part, the affordability of loss. If you have the backup in your mind that I am an investor who is a millennial and he has a time of year of investment for 20 to 30 years, as blockchain is a new technology into the system, the technology is flourishing and you have seen many good technologies built up on blockchain, and crypto is just the one token that Bitcoin has given to us. So if I talk about the technology, it itself is robust technology. Every big company, every MNC is using it to foredate their future. And if I talk about crypto, as it is a new bubble for many people, and if we see last week, there were more than 400 billion worth of investors that were completely wiped off. And many Indian investors were also affected. So if I think about, if I have to say something about crypto, crypto is a thing. If you think that I can invest for good 7 8 years going from now, as it is a new technology, then that is an investment to keep for. And if you think that it can give me an instant gratification for, and I invest 10 lakh rupees and it gives me 15 in a year or so, or in 6 months, then that is a wrong investment to go for, because there are many rules, there are central authorities that are, it is not immune from the government, and there can be many manipulation that can be done. So till the justification is given, till there are new things that have been coming to this technology, till that time we should wait and we should reset our budget and define our goals, what we have to, what we want to achieve from these kind of investment. If it is for a long term investment, then we can go for it, and if the investment is just for the short term, a year or so, then I don't think then that crypto is the new thing to go for at least 1.5 years from now.
Just my opinion on it, I think I should share it here. My problem right now with cryptos is, you say something like a Bitcoin. When we talk about Bitcoin, it doesn't have any intrinsic value. Say it doesn't have an EPS, a yield, a dividend, a rental yield, nothing. So it's very difficult for me to actually calculate its intrinsic value. And the counter argument from the pro Bitcoin camp is it's similar to gold in that sense. So gold is limited in supply, so so it derives its value from being limited in quantity. So Bitcoin apparently can only be mined up to 21 million coins, and most of it has already been mined. So limited supply gives it value. But my thinking on that is, just being scarce or just being limited in supply is not enough. Gold is not valuable because it's limited in supply. It's valuable because it has proven itself over the last 5,000 years as an indispensable, insubstitutable store of value. Tomorrow another metal cannot jump in and replace gold. The problem with crypto or a particular token, be it Ethereum, Bitcoin, any coin, is that it has not proven itself to be indispensable. It has not established itself as the default platform of transactions or as store of value. So till that happens, in my opinion, it's more of speculation rather than investing in a calculated asset class. But yeah, just my opinion.
An investor education and awareness initiative of Aditya Birla Sun Life Mutual Fund. Mutual fund investments are subject to market risks. Read all scheme related documents carefully.